Hello, good morning. You're watching Buy Now, Sell Now on ET Now with me, Vinny Motiwala, along with me, Shrishti Sharma as well. And markets, look at that. That has given up those days highs. We've seen new highs coming in for the Nifty 50 as well as the Sensex. Clearly, as of now, we have seen a sharp fall coming in down there, and at the Nifty and the Sensex both are trading in the red. Nifty almost at the day's lowest point, trading with cuts of almost 0.4% in trade. Sensex too is down with cuts of almost 0.4% in trade. Let's look at the Nifty Bank. That too, with the market has given up the gains, down almost 0.8% in trade. Among the top sectorial users that you look at it in terms of the losers, we have the Nifty PSU Bank that is seeing a sharp cut of more than 1%. Nifty Realty that has continued to see a decline as well, down almost 1%. While most of the sectors today, you look at it as of now, all the sectors actually are trading in the red. So that's an interesting thing that, Nifty actually managed to touch the high, but then fell off, and all sectors as of now are trading in the red. Let's look at what the broader markets are doing this morning as well. The Nifty small cap space is down almost 0.5%, and Nifty mid cap also down almost 0.8% in trade. So clear pressure that is coming in over there. And among the losers now that we have Intellect Design that is down and out in trade, down 7%. We have M&M Financials that is down in trade after we have a brokerage note coming in on M&M Financials. BHL2 down 3%. MCX, Shriram Finance, EU Small Finance, Astral, all these are among the top losers on the FNO space. While in terms of overall, when you look at it, what is actually holding on to some bit of a green today, we have PVR and Inox that is holding on to green. We have Titan that is holding on to green as well. Let's not forget Titan came out with its Q1 operational update. So yes, strong update came in from Titan, 21% growth that we saw. So that is trading with gains of almost 2% as of now. Granules India trading with gains as well. HDFC Life Insurance, IGL, IOCL, IOCL and Praj. Obviously, there is a JV that is happening over there. So IOCL also is in focus on the back of that news. Bharti Airtel, a lot of block deals that have happened this morning over there. So we are seeing Bharti Airtel is trading with gains of almost 1% up. So all in all, yes, an interesting day coming in on the markets, given that we have seen that fall coming in from the high, Shrishti.
Well, yes, some profit booking in the Indian markets. That's how the markets are panning out right now. But viewers, today is Friday, and today we get you the Buy Now, Sell Now Pachala with Kunal Bothra, where we try to decode the concepts of technical analysis, and Kunal does try to break that in a very, very simple language. So let's go across to him and understand what interesting topic he has got for our viewers today. Over to you, Kunal.
Thank you so much for that, Srishti. So today's topic is multiple bottoms and how stocks they generally get into formation of multiple supports where there is demand which originates for the stock price, and then how these stocks they get into a reversal process. So we look at a very simple example of what multiple bottoms and the a simple chart looks like. It's a stock which, for example, goes into a downtrend. Initially the downtrend is more fierce. Now to arrest the downtrend, the stock takes support at a certain level. We call this as a strong support zone for the stock price. It sees a first level of a bounce, a retest of the previous swing lows for the stock price, where again it establishes a strong support. There is demand which originates for the stock at current levels, or maybe some sort of positive news flow which originates for the stock at current levels. After a bout of rally, the stock then retests the major supports for itself. So sometimes it's a double bottom support, sometimes there are multiple bottom supports which happen for the stock price, and then the reversal happens for the stock where it manages to break past about the previous resistances and then starts or charts a new trend for itself. So I've taken two examples over here for the stock. The first example which we've considered is Bharat Forge, the stock forming a multiple support bottom for itself. So this is the very recent charts for Bharat Forge where the stock took multiple support at this zone of 750 approximately. Look at this, the stock was going through a very fierce kind of a downtrend from 890 odd levels. The stock fell very sharply in just a matter of few weeks towards the 750 mark. To arrest that sell-off, the stock goes into a consolidation, and we see supports being more of a multiple basis for the stock, more of multiple bottom, and then the stock gets into a reversal. So after that sharp sell-off and a consolidation, the stock gets into a breakout mode. This is the breakout point which retests the previous highs and crosses above those levels, and then we see a confirmation of the retest of the trend line and then a new trend for the stock prices. One more example which you've taken from the historical charts is Granules, where the stock took a lot of support at the 240 mark. Look at this, a sharp, very sharp downtrend coming out for the stock, then a bounce, a retest of the bounce, and then a breakout of the previous highs for Granules. So these are classical signs, very important signals for traders who are looking out to find stocks, especially trading at multiple bottoms and expecting reversal for themselves.
Okay, that is all about multiple bottoms, and that is what we learned on Buy Now Sell Now Pathshala today. But let's move on and talk about a bumper listing that has happened today, and that is Idea Forge Technologies, and surely almost doubled the wealth of the investors who have actually gotten allotted this one. But let's go across to Sharad, who's here with more details on that.
Well, yes, in focus we are having Idea Forge and a very stellar listing coming on the bourses. The IPO price was 672 rupees per share, but what the prices came on the bourses, they ranged between 1300 to 1305 rupees per share. This indicated roughly 94 to 95% gains when it comes to the listing. Now, of course, this is the most talked about IPO over the last 18 months, and the subscription numbers, if we talk about it, that also came at almost highest levels in 2022 as well as on a year-to-date basis for this year as well. Now, almost 107 times of total subscriptions were there. Now, post-listing, we did our calculations and the valuations that has turned expensive for the stock, with Idea Foods 12-month bought forward P ratio ranging between 56 to 60 times. Now, of course, their peer sets are there such as MTATech, Data Patterns and Astra Microwave. Their valuations are ranging between 28 to 59 times. But apart from this, the company itself, if we go on for the details, the company has a 50% market share when it comes to Indian unmanned aircraft systems, and also it's the 7th largest drone company globally in the world, where there is a dual use happening. Of course, the dual use means one is for your defense and another one is for agriculture. Apart from this, the product portfolio is having hardware, software as well as embedded software systems, and Infosys also has a 4.4% stake in the company. Now, roughly 70% revenue comes from the defense segment, and the order book is coming in at 185 crore rupees.
Well, thank you so much, Sharat, for getting us all those details. A stellar listing coming in for Idea Forge definitely rewarded the investors. But with this, viewers, it's time to slip into a short break. But don't go anywhere. As we come right back, it's time to take all your stock-related queries. To start writing to us, and stay tuned. Welcome back. You're watching Buy Now, Sell Now, a show where we get you answers for all your stock-related queries, and we'll connect with our experts as well. And today onto the show, let me welcome on board Kunal Bothra on the technical side, and on the fundamental side, Avinash Gorakshakar is joining us. A very good morning, and thank you so much, both of you, for joining us today on ET Now. Let me get started with the first query, and the first query, Kunal, is coming from Rajesh Maheshwari from Singapore. He's holding two counters. Firstly is DLF, 250 shares at an average price of 325 rupees. And the other one is Godrej Properties, 125 shares at a price of 1481 rupees. Wants to know whether it makes sense to hold both of these, or rather make a switch with a short to medium term outlook.
So, good morning. First of all, switch, but then switch to which sector? Because I think the real estate sectors have done exceptionally well. And I think as your purchase price indicates 320 and 1400 approximately for the stocks DLF as well as Godrej Properties, I think you've cashed in some very strong gains. Now, there are 2 points over here which you have to understand. That one, from a short-term play, there is bound to be a time-wise correction, possibly for the next 1 or 2 months, where many of these real estate stocks and the high-performing names could get into a patchy phase of consolidation or correction. So if you're okay holding on to those stocks for the next 1 or 2 months, possibly rough months, where the stocks may correct by say 5%, 10% approximately, only then it makes sense to hold on. But if you're looking to trade even in this kind of a consolidation, then it makes sense to book profits for both of these stocks at current levels, and then look to buy back on dips. 475 for DLF, for example, could be a good entry point, and 1500 and below for Godrej Properties could be a good entry point.
Okay, let's move on to the next query. And Avinash, good morning. The first query for you is on BSE. This one is coming in from Subrata Mukherjee. They have BSE at 578 rupees per share. Should they continue to hold, or maybe book some profits there?
I think BSE, has recently announced a buyback at 800 odd rupees, and I think looking at the kind of increase in the derivative volume on the exchanges, plus the kind of popularity of its star mutual fund, kind of platform, I would not be surprised that the next 2 to 3 quarters could be quite strong for Bombay Stock Exchange. I would suggest, they've actually entered the stock at a pretty early level. So they are into a reasonable amount of profit. But if they can hold on for the next 12, 18 months, I think they could see a significant amount of re-rating here. The company is a asset light kind of business model, has a lot of cash on its books. So I think this gives a lot of comfort to them at the current level. So I think it's better to hold, wait for a better price, to exit. So continue to hold at least for the next 12, 18 months.
Okay, moving on, and Avinash, coming to you, the question is from Hemant, and he wants to know the fundamental take on Gandhi Special Tubes, GNA Axles, as well as Suntec Realty. He wants to enter in any of these names within the next 3 to 4 months time horizon. So, any company that you like amongst these?
No, I think within the real estate pack, Suntec Realty seems to be quite attractive considering the kind of tailwinds we are seeing in the real estate market. Suntec is a company which operates largely into the Mumbai market. They have now started an affordable housing project in Boisar, which is very near to Mumbai. They already have a large, real estate development in the BKC area. So I think, margins for this company are definitely quite strong. The company is well managed, and I would believe that at these odd levels, if the investor can enter even now the first quarter number plus the next, 6 to 12 months kind of order book which the company has got should give it a reasonable amount of visibility. So I would believe Suntec seems to be a pretty good bet if he is looking for a short to medium term view.
Okay, then let's move on. And actually, viewers, I have a question for you all before we take your next related queries. You have to spot the difference between Kunal and Avinash today. Take a screenshot, send us, mark the difference, and send us the difference today between Kunal and Avinash today. So surely that's a question you all have to answer. But Kunal, coming to you for the next question. And we have a question coming in from Arvind from Chennai. And this one is on Coal India and Delivery. For their holding the stocks for some time, should they continue to hold for a further period of 6 to 1 year, and 6 months to 1 year is what the question is, and can they look to buy more if they want to also?
Absolutely. So, both of these stocks, Coal India as well as Delivery, I would suggest that, unless it's part of your bigger portfolio, only then it makes sense to hold on to both of these stocks. So, Coal India is traditionally a very low beta, stock. It gives you hefty dividends, but then I think in terms of price trends, it's been a stock which has disappointed clearly on the long-term charts. So that's the only concern with a stock like Coal India. On the other hand, Delivery has gone through a sharp correction. So it's trying to just get into a recuperative phase, trying to recover the losses the stock had shown, I think, some few months back. So I would probably expect the stock to get into a further very slow gradual uptrend. It would take a lot of time for the stock to recover and at least come back towards the previous breakdown level of 550-600. So only if you are looking at it from long-term play, and as I said, it's a part of your bigger portfolio, then it makes sense to hold on to these stocks, but not to add.
Okay, moving on, and Avinash, coming to you for next one. The next question is from Raman from Chennai, and he's holding Laurus Lab and Gland Pharma. He didn't share his buy price and rather whether he's sitting at a profit or loss, but he just wants to know that whether it makes sense to add more of these counters at this point in time, and if he wants to make a switch, then any alternative that you can suggest.
I think Laurus Labs, I think Shristi, he can continue to hold, or maybe even he can average at the current odd levels. Our sense is that this is a company which always believes in adding significant gross block before operating leverage takes in. So I think you are very near to the capacity getting commissioned. So you would see a lot of operating leverage benefits coming in here. So Laurus Lab definitely at this level looks attractive, provided you have a time frame of at least 12-15 months. Which was the other stock you mentioned?
Avinash, the next counter was Gland Pharma.
Yeah, I think as far as Gland Pharma is concerned, there's been a lot of negativity on the stock considering the significant underperformance. There have been some reports that the company is going to be sold out soon, which was denied by the promoters. I would believe that it's better to wait for the June quarter numbers because our last 2 to 3 quarters, there's been a complete earnings disappointment. And I think it would be wise enough to wait for some time. Better wait for the June quarter numbers, look at the business commentary and then take a call. So avoidable at this stage. I would not suggest a buy, at this.
Okay, let's move on to the next query. This one is coming in from Neeraj Verma. Kunal, they're holding 1,500 shares of Yes Bank and 200 shares of Infosys. What would you advise over there? Should they continue to hold, sell both these stocks?
So again, time frame matters over here. If you're looking at it from a short-term play, I don't expect any major returns in both of these stocks. But from a long-term play, I would believe that both these stocks could provide some decent returns. Yes Bank is also getting into a breakout mode. So possibly a 19.5, 20 at best could be a target which you can assign for the stock over the next maybe 12 months or so. Infosys on the other hand, I think could be a good turnaround pick from current levels. Now the stock, I think if I'm not wrong, is also due for the results in the next couple of weeks. So that could probably play some bit of spoil sport over the near-term trend. But then when I look at the longer-term charts, the recovery for global indices and the IT sector overall, I would believe that it could just be a matter of time that large-cap IT stocks like Infosys, TCS can also see a breakout. So time is what is important. If you're in from long-term play, then hold on to both of the stocks.
Okay, Kunal, once again coming to you. This question is from Satya from Hyderabad, and he entered NoSil 2 years back from a price of 285. He's at a loss since then, and he just wants to know whether he should continue to hold on this particular counter or rather make a switch. He can stay invested for the long term.
I think you can make a switch at current levels, but my only concern is that the stock has not yet confirmed a breakdown of sorts. So since you have held patiently for the last 2 years, I would probably expect that give it more 6 months or so, or in terms of levels, keep a stop loss of 199 or 200 for on closing basis for the stock. I think that's been a major support at least over the last many months for NoSil. So unless the stock breaks below the 200 level, I think you should continue to hold on.
Avinash, we have the next query that has come from Thomas George, and they want to know that is it a time to invest in Varun Beverages at the current market price for the long term?
Yeah, I think Varun Beverages is a quasi-monopoly player in the beverage market. I think they are franchisees for Pepsi, and I think the stock has corrected from higher levels. Obviously, valuations are not cheap, but I think looking at the kind of growth momentum and the kind of product segments they operate, they are largely a B2C player, and they have a virtual monopoly as far as the Pepsi product range goes. So I think typically in a tropical country like India, the demand for cold drink and beverages is pretty strong. So I would suggest that unless the investor has got a couple of years time frame in mind, then only he should look at buying this share, and that too also on dips. Definitely the risk reward could be quite attractive, but the time frame needs to be slightly longer term.
Okay, Kunal, the next question is for you. The question is from MSV Raghavan, and he's been holding shares of Jubilant Ingrevia from a price of 300 rupees. Holding since the last 3 years and wants to know what's the outlook. He can continue holding it maybe for the next 1 year.
Well, I would suggest to exit the stock, and I think it's better to switch to some other name. Few of the pharma stocks which I think have looked attractive and are on the verge of a strong breakout could be Glenmark Pharma, even at current levels of 630, 640 where it's trading right now approximately. Sun Pharma I think has been looking quite charged up, so relatively low beta stock, but a formidable name from the pharma pack looks attractive. Or you can look at shifting towards Zydus Life. Even that stock has done reasonably well. So I think it makes sense to switch from Jubilant Ingrevia to either of these three names.
Kunal, I'm going to come back to you. The next query we have is on two stocks. One is Zomato and Indian Hotels. The viewer is holding 5,000 shares of Zomato, making a 30% profit over there, and 300 shares of Indian Hotels, and 20% profit is what they're making over there. So should they look to completely exit both these stocks and maybe look to invest in something like an ITC or a Bank of Baroda for a period of 1 year?
Well, because we've given the second option, I would probably prefer that you can take the first one as well, that book profits in both Zomato as well as Indian Hotel, because you're shifting to some other quality name like Bank of Baroda, etc. So I would believe that the PSU banking stock and the lot looks very attractive from current levels. Bank of Baroda is one of the strong stock which has done reasonably well. So I think making that switch from Indian Hotels as well as Zomato could actually be a good strategy, given the kind of prospects which you are looking out for from the other large cap names.
Okay, moving on to the next question, and Kunal, the next question is from Anjali, and she wants to know, can she enter into UPL at this point in time?
It's been a disappointing stock. I have tracked UPL quite extensively, and I think the stock has been unable to just lift off into any kind of a major uptrend, as well as it tends to be a big underperformer in major part of the market rally. So such kind of stocks you should ideally avoid, because you are uncertain that how long can the underperformance and the drag or sluggishness continue for the stock. So it's always best to avoid these kind of names rather than looking at buying on dip strategy.
Okay, on that note, viewers, we're going to sip into a very short break. Don't go anywhere because we'll be back with more of your stock related queries after this break. Welcome back, and you're watching Buy Now Sell Now on ET Now. As of now, you can look at the markets. Still, Nifty is down and out, trading at the day's lowest point below the 19,400 level. Just slipped below that as of now and coming back to those 19,400. But let's move on and keep it going with all your stock-related queries. And Avinash, the next one is on Sterlite Tools. The viewer, Satya, wants to know that well, is it a good time to actually buy Sterlite Tools for the next 1 to 2 years? And if yes, what would be the buying price if not at the current price?
The second largest, fastener company in the country after Sundaram Fasteners, and in fact, they have three facilities. They made a very strong, entry into the electric vehicle market also. They have about almost 30 odd clients, and I think the focus of the company in the next 2 years is going to be on the electric vehicle segment. Our sense is that if the investor has got a 12 to 18-month horizon, a price of around 350 to 355 could be a good entry point, because we believe that it has a marquee list of OEM customers, and plus the electric vehicle business would give it a very strong kind of growth over the next couple of years. In fact, the numbers have also been pretty solid. They have a ROE of almost 22%. They generated a profit of almost 50 crores this year. And I believe the next couple of years is also going to be good, considering the positive tailwinds in the automotive sector. So I think gradually one can buy in this weak market, but keep a time frame of at least 12 to 18 months.
Avinash, once again coming to you, the question is on IOC. All these OMCs and gas counters are buzzing, and the viewer, that is Mohit, is holding shares of IOC, 1500 shares from a price of 77 rupees. He wants to know the outlook and what to expect in the next 2 years.
Yeah, I think oil marketing companies have largely benefited because of the softer trend seen in the crude prices. And I think the key triggers for oil marketing companies in the next, say, 2 to 3 quarters is the growth in the domestic automobile and the aviation sector, where maximum amount of throughput is consumed. IOC is now putting up a large refinery where the investment is about 50,000 odd crores. They've also announced a rights issue. So I would believe that the numbers going forward also are going to be pretty solid. We could expect very strong GRMs in the June quarter also. So hold on for the next, say, 12 months. I would believe that he should definitely see a further upside here, because oil marketing companies are expected to generate a good amount of profitability in the next couple of quarters.
Okay, let's move on to the next one, and this one is coming in from Muthuraman from Chennai. And Kunal, this one is on Keynes Technology. They have 250 shares of Keynes Technology at 1,450 rupees per share. Should they continue to hold or sell?
I think we should book out profits. The stock is establishing a major resistance at the 1600 mark. Now, as of now, we can expect that this is a time-wise correction. But in case if this price correction gets converted into price correction, then the stock can come back to 1300, 1350 mark. So it's better that you're sitting on high profits and you've purchased at a slightly elevated level with respect to the recent market trend for Keynes Technology. I think it's a good time to book out profits and then revisit the stock in case if it gets into a correction closer to that 1300 level.
Okay, Kunal, the next question is also for you. The question is from Amrita from Gurgaon, and she wants your view on two counters. Firstly, at this point in time, can she enter Maharashtra Scooters? And the second one is she's holding PTC, bought at 107 levels, so good time to book profits or hold on?
Maharashtra Scooter, you can look to buy at current levels, but then I think it's a very slow, gradual moving stock. I think now at 5,700 approximately, that the trends for the stock is far more stable. So you can look to invest into this stock at current levels, but then keep some powder dry and look at this as a staggered investment approach and don't put the entire capital at current levels. For PTC, I think it's a good time to got profits because the stock seems to have gotten to a bit of a stretch or an extreme. 120 was the recent high for PTC, if I'm not wrong, and I think the stock has retraced from those levels. So it's established a major resistance at that 120 mark. So it's a good time to book out profits.
Avinash, Krish wants to know whether it's a good time to enter CMS Infosystem. What is your fundamental view on this one? Is it looking attractive on valuations as well?
I think longer term, I think this company should do well. They are one of the largest cash management companies in the country. They have a pin code penetration of almost 15,000 points all across the country, and they are working with several banks, financial institutions. They also have a e-commerce kind of unit. But the best part is, it's a debt-free business. Most of the cash is generated and is funding their capex plans. The last year, the company posted a revenue of 1700 crores and a profit of 284 crores. And the management commentary has been very solid. I think the key trigger for this company is managed services. The margins and the growth potential is quite immense. So I think somebody who wants to invest now can easily expect a price target of around 425, 450, but a time frame of at least 12 to 15 months.
Okay, Kunal, what's your take on NTPC? This particular counter has been buzzing off late, and Jay Krishnan from Kerala wants to know, is this a good time to buy this counter for a medium-term outlook?
Well, I would be bullish on NTPC. I think it's a good time to try and chip into this name. You'd be surprised that I think this is the sixth or the seventh straight quarter where the stock has registered positive gains. And even though it's very slow, gradual move for NTPC because of the inherent low beta nature of the stock price, but I think it's a good stock which has performed quite well over the last many quarters. So I would expect the stock to continue to do so for some more time over the near term as well as on the medium term. So it's a good time where you can look to start chipping in.
Avinash, the next query is actually a much smaller stock, and this one is coming in from Poonam, and it was Viswaraj Sugars, which is they have 1,500 at 16.5 rupees. What should they do with this? Continue to hold this for the long term, or maybe just look out to get out of the stock?
No, I think Vishwaraj is a small player operating in Belgaum, Karnataka. It has a large sugar unit. It's got a 1 lakh liter per day ethanol unit. I think we could see better numbers in the coming year. In the last year, the company reported a loss because of some deferred tax adjustment. But otherwise, I think the fundamentals are pretty solid. If the investor can hold on for the next, say, 8 to 12 months, you could expect a price of around 25 to 30 rupees. So, this is a low price stock with a little less liquidity. But yes, I mean, the next 12 to 15 months could be quite promising, considering that they are now expanding into ethanol and the sugar prices have also gone up. So that should benefit the company going forward.
Kunal, the next question is from PR Reddy from Hyderabad, and he wants your suggestion on Voltamp Transformers. He's been holding 65 shares from a price of 3,280 rupees. At this point in time, can he book profits or rather hold on? He can continue holding it for the next 1 year.
I think good time to book profits and revisit the stock in case of any correction. Again, a stock which has gone through a time-wise correction, unable to surpass about the previous highs of 4,250, 300. Could probably come back below that 44,000 mark. So I think maybe 3850, 3900 could actually be a good re-entry point if you're a short-term trader. But otherwise also I think it's a good time to book out profits because the indicators are also seemingly getting into an overbought territory for Voltamp.
Okay. Avinash, the next query is from Biswajit from Bhubaneswar, and this one is on Wockhardt. They have 500 shares of Wockhardt at 254 rupees. What should they do? Should they have a holding period of a medium to long term is what they're ready to wait? So should they continue to hold the shares?
Yeah, I think Wockhardt has been one of those pharma companies, unfortunately, which has never delivered on the fundamentals. All their facilities which are registered under US FDA still continue to be closed because of restrictions. I think the only positive for this company is that it has been a takeover candidate for a long time. So I think, if the investor has a time frame of at least 12, 18 months, if there is a kind of a situational kind of, development happening in this company, then only the stock could get re-rated. But otherwise on fundamentals, I think it's better to avoid it. Since they hold the stock, I would suggest, just keep on holding because clearly the asset is really good, but the financials are not at all encouraging. So I think, probably another 12, 18 months, if this deal happens, if the unit is sold out to some other strategic buyer, that could possibly lead to re-rating. Otherwise, in the near term, there are not many triggers.
Okay, moving on to the next question, and the next question is on Kalyan Jewelers. And Kunal, this one is for you. Arvind Reddy has bought 150 shares at a price of 106 rupees. Wants to know the short-term target on this one. The company also came up with its Q1 updates, and that's why you are seeing a great surge of 8%. So what to do next?
I think it's a good time to book out profits because such kind of steep rises, they generally don't tend to last. Especially when the market or the indices get into a reversal phase. You may probably have maybe 1 or 2 days of carry forward up move, but I think it's a good time to try and start booking out profits. At least a 50% profit booking at current levels, if not more, is what I would advise at current levels. And in case if there is any further room on the upside, say till 170, 72 odd mark, that's where I would believe that you should look to book out profits.
Kunal, I'm going to come and ask the next query to you as well. This is coming in from Ghosh Dada, and this one is on, just a minute, CG Power is what they're talking about. So they had started buying CG Power at an early time when it was around 12, 13 rupees. They booked out some of the profits as well. and so most of their cost is recovered. Now they're holding 16,500 shares of CG Power. Do you think it will somewhere around the time reach the 500 mark? Should they continue to hold those remaining shares? What is your view on CG Power?
See, the only concern with the stock like CG Power is the last 3-year time frame chart, the stock has moved exceptionally well. So from 5 rupees to almost 400, 389 or 388. 398 is where the stock made a high, I think if I'm not wrong. So, it's been an exceptional mover in the last 3 years or so. You can't expect the stock to continue to give such kind of returns over a longer term time frame. The concern with CG Power chart currently indicate is that the indicators on the quarterly chart are getting into a very high overbought territory. So, which means sooner or later the stock could get into a major multi-year time-wise correction or at least a price correction. So, it's a good time that to book out profits from such kind of stocks.
Okay, Kunal, and the next viewer wants a technical outlook on Axis Bank, probably for the next 2 quarters. The question is from CD Murthy, and he's highlighting that the stock is actually trading in quite a tight range. So how do you see this counter? Because we just have been waiting this one to hit 1,000 mark, and every time he used to face that rejection around that 980, 970 odd levels. So do you feel that going ahead we could expect those levels?
So, what happens is when a stock gets into a consolidation and it takes a resistance at a certain point, which means that the stock is not ready for a breakout. And, sometimes we see the stock getting into a sharp retracement. So, many of the times we've seen that, the stock gets into a correction of 5% to 7-8% as well. So, I think it's better that you start looking out for better entry points on the downside. In case if you're looking to buy the stock, then I think maybe closer to 925, 940 mark could actually be a better level to buy Axis Bank. The risk reward could be much better over there for the stock price rather than current levels.
Okay, let's move on. And Avinash, the next one is on Praj Industries. Mahesh, who's a senior citizen from New Delhi, is holding 150 shares of Praj Industries at 387 rupees per share. What should they do with this one, hold or exit?
I think Praj should be held on. It's one of the largest ethanol equipment manufacturers in the country, enjoys a very large order book. And the best part is that the government has also promulgated, ethanol blending to 20% by FY26. Apart from that, they have started building new technologies on special aviation fuel as well as compressed biogas. And I think these two products are going to, generate a lot of revenue over the next, say, 2 to 3 years. So I think he should hold on, keep a time frame of at least, 1.5 year. And I think he should definitely expect a decent risk reward.
Okay, so that's the view on Praj Industries to hold on at this point in time. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries.
Welcome back, and you're watching Buy Now, Sell Now on ET Now. No respites for the Nifty 50, comfortably actually below that 19,400 level, fallen from the day's highest point. But let's move on and keep it going with all your stock-related queries. Avinash, the next one is coming in from Kasi Raj from Tamil Nadu. They are holding 220 shares of Narayana Hrudayala at 921 rupees. Should they continue to hold or maybe look to book out and sell?
I think they should hold on, considering the fact that this is one of those hospitals which is extremely profitable. And in the past, we have seen that most of the specialty hospitals are doing pretty well. Hopefully, if they can stay invested for the next, say, 12, 18 months, I expect better numbers in FY24. And hopefully, the specialty business of Narayana Hrudayala should do very well. So I think hold on. They should definitely get a better risk reward, provided they have the tenacity to hold on for the next 12, 18 months.
Okay, Avinash, once again coming to you, I'm not sure whether you tracked this particular counter or not, but Vignesh from Vellore wants to know the outlook on Sheetal Cool products for a long-term period.
Based company and a small company which has now migrated to the main exchanges. It was an SME company earlier. The company has a very solid business model. I think within the cold storage market, operates largely in Gujarat. My sense is that the stock has jumped significantly, and I think at these levels, current buying would not be suggested. If at all the stock corrects significantly, then I think one could look at buying into it. But yes, longer term prospects are pretty encouraging and solid. But current price offers a very little risk reward to the investor.
Kunal, next query is from Pankaj from Pune. They have Engineers India 690 shares at a price of around 73 rupees per share. What should they be doing with this one? Should they book out profits or continue to hold for the next year or a couple of years?
Hold on to it for the next couple of years. I believe that we have just started to see signs of a major turnaround for many of these PSC names, and especially for Engineers India. I would be bullish on the stock given the prospect of the charts over the very recent as well as on the medium term. So I think with a time from 2 to 3 years, you can continue to hold on.
Okay, moving on to the next one. And Kunal, the next question is from Silva Pandi from Tamil Nadu. And he has bought 205 shares of Alembic Pharma from a price of 765 rupees, sitting at a loss in this one. He's looking for maybe a 1 to 2 years of time horizon and what to do next in this particular counter, or rather make a switch to any other pharma name.
I think you can continue to hold on the stock at least from a near to medium term play. You know, it's getting into a recovery phase from the 3-month or 4-month back lows. The stock has come back towards 650 marks. It's in a decent recovery of more than 20% for the stock price in this last couple of months. So I believe give it more time. I think it should at least come back to your cost price before you can try and make that switch.
Okay, on that note, viewers, we're going to get started with the rapid fire. And Avinash, the next one is on Gallant. Mathi has bought 250 shares of Gallant at 65 rupees. What should they do now?
I think they should hold on, considering the fact that the company's business model is very strong. We hope definitely next year should be much better. So continue to hold on.
Okay, Kunal, the next question is from R. Dubey. Can he buy PNB Housing or GE Shipping at current market price for short term?
PNB Housing, you can consider buying. GE Shipping, I would suggest an avoid.
Okay, the next query is on Tata Motors from Sangeeta from Bangalore, and they're holding 60 shares of Tata Motors at 432 rupees. What should they do for a long term now? Avinash, continue to hold this?
Yeah, I think Tata Motors should be held on. I think we could see higher levels in the next, say, 12 to 15 months. So continue with the hold.
Kunal, Purnima wants to know, can she buy Havells at this point in time?
Well, yeah, I think at current levels, a very attractive price to buy the stock.
Padmasiva Ram from Bangalore is holding Anantaraj at 150 rupees. Is it time to book profits or continue to hold this one?
Yeah,
Avinash?
I think you can continue to hold. The stock should do well over the next, say, 12 to 15 months. Operates in the Gurgaon market and should do very well for FY24.
Okay, Avinash, the next question is from Jaya Devapa, and she wants to know about Polyplex holding 65 shares from a price of 1475 rupees. It's a long-term outlook on this one.
Yeah, I think Polyplex is unlikely to offer a significant risk reward in the near term. So unless the investor has got a 12 to 18 month horizon, hold on. Otherwise, book out.
Kunal, we have a viewer, Rajendran, who is making a loss on Vakrangi as well as on Yes Bank. So, should they book their losses and move out of the stocks and buy something else? If yes, then what stock?
Yeah, I think it makes sense to exit both of these stocks and switch towards a better quality name. If you're looking to buy, then I would probably recommend something like Reliance at current levels, and you can also look to consider buying ICICI Bank.
Okay, Kunal, quickly on PNB, Girisha is holding 25,000 shares from a price of 53 rupees, and this one is seeing a sell-off today. So continue to hold on or book profits?
I'm extremely bullish on the stock from a medium-term play. So if you have a time from 3 to 6 months, hold on.
Okay. With that was the last query for today. Viewers, thank you so much, Kunal, as well as Avinash. And all those viewers who actually answered and spotted out that Kunal and Avinash are winning, you're absolutely right. It's not only the tie, it's also the shirt that is winning, except for the glasses. So yes, today we have both of them looking like twins there. But on that note, viewers, we're absolutely out of time on this edition of Buy Now Sell Now. It's a goodbye from Shrishti, myself, as well as the team who put this show together.